Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's discuss the situation on the euro currency. Well guys, here something has appeared that we can discuss right now. It's at least something we now see on the euro currency on the daily time frame, on the 4-hour time frame chart. And particularly speaking, this recent action that market is showing within the second day in a row to the slightly upward continuation makes me think that we could see some initial splash to the 138.60 area, and whether it will be the true breakout, market will hold above these highs, or market will show just the wash and rinse of these highs and return right back down, we do not know right now. But what we do know is that we have extreme target is 1618 extension of that ABCD pattern that hasn't been hit yet. And in our weekend we said that purely speaking, if we base this ABCD extension on the point where the upward action really has started, then we could say that by this action to the upside, by this spike up, market has hit the 1618 extension. But as we said also that always exists risk that market could proceed high to the ultimate point if we'll take a look this ultimate point of the starting ABCD action to the upside. So if we will base our extension on this point and we will calculate 1618 right from that real low ABCD action to the upside, we will see that 1618 extension hasn't been touched yet. And what is more interesting is that this 1618 target stands above this high. It means that if market will proceed higher to the 138.60 area, these highs will not hold. Market definitely will wash out these stops that have been placed here, those who hold now the short positions. Well, and the moment, the issue why I start to think about this potential spike to the upside has come from this retracement. Because if market really has hit the 1618 extension of this ABCD pattern, okay, it should show some deep retracement as we respect, because market needs to change the scale of possible upward action. As ultimate target has been hit, market should double the scale to the upside. So it should, if we could call it, start the second swing to the upside and treat this action only as a B leg, then this should be retracement and BC continuation. So that is some sorts of the fractals when the market doubles the scales of the greater pattern. So initially when the market starts pattern, it will start with the smallest thing, then and shift this big swing to the treat this big swing as just initial swing of the greater pattern and so on. And if this really would be true, this retracement should be greater, because as I said, as market has hit this ultimate target, it should start to double the scale to attempt to continue move higher, and for doubling the scale it should show the deeper retracement, as we initially thought this retracement could happen right to the 135.50 area. That is possible, but currently we do not see it. We see just minor bounce. It's really too small as a respect of the ultimate 1618 extension. And that makes me think that market still will show another leg to the upside. That could be the clue to understanding what point to choose, this one or that one, as the starting move. Although real move to the upside has started right from this point, this minor retracement points that market really could respect the larger ABCD that has started in fact from that low. I hope I'm not too confused you with these thoughts. So anyway, the major idea is that market really could continue move slightly higher and hit this area. Whether it will be failure breakout or market really will break through this area and continue move to the upside. When it will happen, maybe today, maybe tomorrow in the FOMC meeting or something around. Well, if you'll take a look at the 4-hour time frame chart, you'll see that here we could get the butterfly sell pattern on the 4-hour time frame chart, and that has target 127, stands precisely at the highs on the daily time frame chart, and 1618 stands at 138.75 area, slightly higher, 15 pips higher than the target of this ABCD pattern. So market simultaneously this point on the potential wash and rinse, because theoretically this pattern is the reversal one, and if market really will reverse to the downside with the attempt to make the deeper retracement, that could be the failure breakout of these highs, just wash and rinse and turning to the downside. And recall now our discussion of importance of this high. On the monthly time frame, on the weekly time frame, we said if market really bullish in the long-term perspective, in any way market should hold above this high. Only if market will show the real breakout, in this case we could say that market stands on a roll to the 1.44 area. But in the short-term perspective, our major concern is appearing of the potential reversal pattern. That is the butterfly sell. So maybe in the short-term perspective, this could trigger just some retracement to the broken highs or something of that sort. Market will continue to move higher, but it's a bit far perspective, and we will not discuss it right now. But in the short-term perspective, we have the pattern on the 4-hour time frame to watch for. We have the pattern on the daily time frame. And this really could be tricky action around this high. It's around 138.60 area. So that's our major object to watch for in the nearest couple of sessions. Well, because I suspect that market will take the challenge of wash out these previous highs, whether it will be the real breakout or fake breakout. We will see what will happen. Also take a look at the behavior around weekly pivot point. So market has tested it and returns right back up. So the bullish sentiment still holds here based on the weekly pivot point, and that is here you also see some stop grabbers. That's 2 candle stop grabber. So market has shift trend to the bearish and return right back again. Now we have another one, smaller stop grabber, market continue to move high. So these stop grabbers, at least theoretically, assume the taking out of these highs, the most recent highs. That's also coincides with the weekly pivot resistance one. So it's very interesting action in short-term perspective. So the patterns, that being said, that the patterns that market has formed right now suggest, the probability suggests that upward action is possible with the, at minimum, the wash and rinse of the 138.60 area. What will happen next? It's very difficult to predict, because mostly, I suspect that mostly will depend on the FOMC. Well, but that is in general the major pattern to watch for right now. So let's see what will happen. At least currently, the patterns that have been formed and are forming right now on the market suggest some, at least small, upward continuation. What will happen in reality and how FOMC will impact on the overall market situation, we will see.